Scott. Hello, Steve.
Hello. Happy Thursday.
Coming through loud and clear. Happy Thursday to you as well. And what a Thursday it was. What a
Yes,
Thursday
sir.
it was. Okay. So I'm going to attempt to minimize my... Everybody, I'm on a laptop today with a very small screen. I was on a larger screen, but had some technical difficulties. So if I fumble a little bit today, then just bear with me, but hopefully it won't be too severe. All right, so before we get started with the fun today, I just want to take care of the legalese. I just want everybody to know that Trade Ideas, all the crew here, we are sharing this information with you today purely for educational purposes. So please don't take what we say here today as an investment to buy or sell securities. If you need that type of service, please seek out the registered individuals at the appropriate firms for that type of activity. So everything we do here for today, other than being a lot of fun, is educational. All right, Steve. So how about we let you give a little market recap here, talk about the interesting action that we did have on the major indexes today, specifically the SPY. And then we'll go into the rest of the show.
Sure. Well, yeah. Well, let's take a look at the actual charts.
Let me fumble my way to the daily chart here. Okay. How about that? Coming through pretty good. Is that large enough?
Yeah. That's the cues. Let's put on the
old spot.
Put on the S&P.
All right.
And yeah, again, guys, sorry if our audio is a little bit different. I'm at my home base, and Jamie's on the dark side of the moon today, so we'll do our best to work with the audio we got. Yeah, once again, if you attended the webinar last night, talked a lot about the gapping and the ranges. The volatility is certainly back as we look towards Europe. I guess, as I understand, the vote from the Brexit, which the market seems to be focused on, is going to happen while we sleep in the middle of the night. But it looks like, based on today's action, last night's overnight action, that they feel pretty confident, that the market feels pretty confident, I should say, that there's going to be a favorable outcome to what the bulls and the buyers certainly want. And we've been talking ad nauseum about that trading range, between 205 and 211 roughly. We're still in the middle of that trading range. I mean, we're still kind of in no man's land, and we still don't have an actual concrete decision from the actual vote itself. It's been nothing but polls up until now, and so this market's been going back and forth on different polls. But nonetheless, the volatility is still here, and we're still range bound. Things we've said in the past, when the volatility is like this and the gaps are like this, two things you can control is your share size and your attitude. Everything else is beyond your control: market action, market dynamics, direction, news. So what you can do to try and keep yourself sane and keep things not as volatile in your account is downsize shares a little bit. You can just downsize your normal share size, and you can still get some decent movement in this kind of action until we maybe break out of this trading range and get out of this volatility. Hopefully this Brexit vote will take us out of the volatility we've been seeing for so long, because it has been pretty statistically noisy. But Holly had a nice good day with a nice green candle we can see there. Coming into today, it was, again, a bit choppy. There was a lot of days where we had big reversals from highs to lows and back again. But today, a decent gap up and then a really nice close for the most part. So we're going to focus forward today on some of the Holly calls that came out and see what meat might still be left on the bones of some of these trades. And also, of course, talk about some of the new risk management that's been deployed for Holly the AI. But for now, it looks like we did build a higher low down there below 207, those two tweezer wicks, because that level is holding. We tried to give it back, but couldn't get it back, and then today pushed on higher. So, bias could be back again, that we're going to assault that 212 level at some point. But again, let's wait and see what the actual news is and how the market does react to the news. But it's kind of like a drunk man in the alleyway. You push him and he staggers and he keeps coming back at you to the long side. So he takes a few shots but keeps on staggering in the direction he wants to go, and that seems to be the market direction. Wants to go back and challenge that orange line again. But we'll see. Time will tell. We're still in the no man's land right now. That's my thought.
Those are good thoughts, Steve. Those are good thoughts. So, where'd my cheat sheet go? Of course, this is one of the issues that I talk about. Okay, so let's do the Holly recap next. And boy, those of you watching Holly today know that there's no shortage of trades today. But more importantly, Holly finished with a nice profit on the point side of $1.64, and we had a total of 19, 22, 5, about 30 trades, it looks like, right? So the majority of those trades coming from the support is that U over 20, and just to refresh everyone's memory about how these strategies are designed, they're all designed with short hold times in mind. So you can see that most of these guys are 60-minute holds. We have a 30 and a 45 down here. Now we do that for a couple of different reasons. More importantly, so we can track Holly so that she's back flat at the end of every session, and that way we can continue to track her against the S&P, which I guess before we kind of dive into the trades here, let's just take a look here after today's close. The results have been folded in. We're starting to curl back up here, put a little bit more distance between us and the gap that is the S&P. So starting to curl back up. We'll see what happens tomorrow. But more importantly, this is a nice number. Don't get me wrong. Everybody, I'd take that each and every day, even on that amount of trades, because at the right commission level, that's money. But we've got a lot of trade arounds to talk about today. Primarily focusing on the non-exit profit column. And
yes.
We've recently added to the strategy grid itself. It used to just be on the all trades blotter, as you can see down here. But now we've got it on the strategies as well. So a lot of things to point out, because as we always talk about, Holly has to get out of her trades at the mark that she's programmed to. There's no thinking on her behalf. There's only doing what we tell her. So let's just get the the 5-minute chart a little configured a little bit better here so everybody can see. Hopefully that's visible to everyone. So the shining star today, just on a P&L basis out of the $1.64, we'll just resort by this, and we can see float on did the best on a 60-cent total take. So we get 60, 51, 39, all adding up to this. But the real magic today, ladies and gentlemen, was in, of course, that's triggering aftermarket for some reason. They do that sometimes. Yep. Unfortunately, I don't mean to get too sidetracked here, but as everybody knows, I'm on the road right now, spending some time in small town Texas. And, was down at a relative's house, and like, boy, that market sure did go up today. And I was like, well, actually it didn't. It was what they call a gap up. They just take the market from the close up to the open. But, people that don't really pay attention, they just think that the market opened and it ripped up and everybody had this chance to participate, blah, blah, blah. So we all know that's, that's in an ideal world, and that's not the world that we live in. So, considering the fact that it was a pretty significant gap up on the SPY, I mean, 2 points or so, or close to that. Both Steve and myself were kind of, talking to each other this morning. We're like, well, a lot of the readings we were getting here are mixed signals, and we got the huge gap up, but man, we'll see what happens. And boy, it turned out to be one of the better days that we've seen in a very, very long time. That's
probably one of the better days I've seen in that non-exit profit. I mean, just the support is that you alone garnered $6.29 of alpha. Sunrise mover, another $2. Float on, another $1. Support is that you above, another under 20. There's about 11 points there that are definitely not reflected in the Holly's P&L, and we'll talk again about more of the exiting reasons, because today we certainly had a lot of profit saves as the reason for exit. So, but yeah, that's just very very impressive to see, and that's why we like to focus on that non-exit profit, because again, Holly is not a black box. You don't have to get out when she gets out. Matter of fact, as we move through some of these trades, I want to really try and remind people a real simple method to be on these profit saves would be, okay, decent, maybe I'll sell half and let the other half run. I mean, there's really nothing wrong with that strategy. You're playing with in those cases, the profit save exits. You're in a profitable trade, where Holly is using the algorithm that she has, that once it triggers a certain level of positive trade, it kind of enables and activates the stop loss. And so if the trade comes back down through that level, it becomes a profit save, kind of a stop loss. But in those cases, I still believe that you've got a winning trade to start with. There's no reason to always exit your entire amount on winning trades. We scale out all the time in the live trading room, and it's a decent strategy to use, because you probably heard me say it can really help satisfy some of the emotional demons of, should I sell, should I not sell? I'm afraid if I don't sell, it's going to pull back and go flat on me. When you just sell half, sometimes that just quiets the mind and makes things a little bit easier. So, we talked about it this morning with Dan again, and we all just kind of realized, when we have these green trades on Holly, there really is not a reason to exit your entire amount unless that's what you decide to do. I mean, again, I'm not telling you what to do. It's ultimately your decision as a discretionary trader, but we're just trying to hammer home the point that Holly is the idea generator and you are the trade manager. And you can learn from some of the things that she may do on risk management, but it's your trade to manage. So real happy to see that great non-exit column today, because a lot of people say, well, this is just a day trading type of tool. Well, not when you have days like today and you have good entries and they close on highs and may have some more follow through. So there's always that to consider too. You can easily turn these trades into longer term position trades or swing trades, especially maybe just selling half, because that really just kind of clears the mental decks for you.
And Steve, I had the exact same conversation with another client this morning, and he's like, okay, I like what's going on here, but what about swing trades? And, of course, that's just the second half of the equation, okay? You're in a good intraday trade, it's moving your way, it's moving strong into the close. What do? We go back and we look at it on the daily to, see if it has any room, if it's running right up to some resistance, maybe you take it off. But, whether you hold it overnight or, scale out a half in the beginning and give the other half back to flat to satisfy the greed and the fear demons, pay them their pittance so that you can continue to do your thing. People try to make it way too complicated, with just about everything. So it doesn't have to be. It's relatively simple, all right? But we humans like to complicate matters. And that's one of the underlying themes of Trade Ideas and these webinars and the Holly Trinity that we try to promote here, is that it should be simple. You go there, you sit in front of your terminal, you react. If there's nothing to react to, you don't do anything, right? Going back to sometimes the best thing is to sit on your hands. So when we're in a good trade, if we're up, just like Steve said, peel out a half, give the other half back to flat. Worst case scenario, you're going to make something.
Yeah, it can make it so much more relaxing and less stressful when you scale out sometimes. You don't have to fight your demons.
Absolutely. So let's go ahead and jump in here, and once again, looking at this non-exit column on the strategy grid. Holly's closed out $1.64, but there's about, let's see, 7, 8, 10, over 10 points left on the non-exit. So how do we extract some alpha from this non-exit profit column? So let's talk about how to do that, right? So first off, I'm just going to take the all trades plotter here, and I've sorted it by the non-exit profit column. Now, it just so happens that the biggest one is the $1.75, and it was actually a stop out. Holly got stopped out. Let's take a look at the chart here.
One of the very few
so
today, I might add, yeah.
Exactly. So here's Holly trying to get long. Doesn't work. Keeps on cruising, bottoms out and then bounces. And then we can see what happened the rest of the day. But what we do in a case like this, when you see Holly get into a long trade such as this, and she gets stopped out, the easiest, simplest way to focus on this trade around would be to take the entry price that Holly was long, $27.55. She gets stopped out, and then you can already see I've already got a price limit alert set, right? Right here is the green line at $27.55. So we set the limit alert. Of course, this one's already triggered. But, once it's down here or wherever, you just set that limit alert. It could be as soon as she does it. You're like, if it comes back up to that price, I want to know about it. Now, had you done that today, hopefully some of you did, you have been alerted in this area. A lot of people always ask, well, what should I risk on a trade? Well, it kind of depends. Everybody's a little bit different, but if we distill it down, we want to risk as little as possible to make as much as possible, right? So for, these type of setups, what I like to do is just basically take the entry bar and, keep in mind these are 5-minute candles, right? So here's the entry bar. Look back 15 minutes, not including the entry bar, 5, 10, 15. Now this one is real pretty. They're not always this pretty, but in essence, 15-minute low, there might be some wicks usually here or some longer candles. But these guys really flattened out as the buyers and sellers became equalized before the move. This is also a little NR7 pattern here, so our risk would have been slightly down here. Not a bad risk to reward ratio, right? So, alert here. Then, if you're a range break guy or girl, then, you had a second entry opportunity right here, which was the lion's share of the move, right? And if you're already profitable here, one of the biggest things that traders always ask themselves or ask me, who should I add to a winning position? Well, if you're already in it and you're profitable and then it repeats a pattern that you like, which in this case, this is what I like to see, then you could have easily added to that position and done quite well with it.
So yeah, just to paraphrase, and this is the kind of thing that's happening all the time in the live trading room. Barry does a great job of monitoring stocks that may have been closed out or stop hit by Holly, and then marking it back up with the original entry point. Because remember, the statistical trade is good for the whole day. Obviously you can see on this particular chart, stop was just a little bit too close. Holly's risk management was just a little too conservative, but this kind of thing happens all the time, and so we're trying to hammer home using the price alerts or some sort of, if you don't have the price alerts, use some sort of mechanism to trigger you when the price returns back to that second time of the original price entry point, because sometimes Holly 2.0 trades work out a lot better than Holly 1.0 trades, I can tell you that. So,
right. So to make it simple, as soon as Holly gets stopped out of a long, just set a price limit alert for that price and then go about your business. Go on to something else.
And then, like Jamie said, once it broke that opening range, that's a perfect opportunity to add to a winning trade. So I agree with both accounts that he had there. Both very interesting levels to keep an eye on those types of setups for sure.
Exactly. So now we look at a completely different type. It's a little bit easier, if we can even use the term easier when we're describing trading. Makes me a little nervous. But this one, no stop out. Holly gets long right here, which is a pretty darn sexy looking entry. We get a little bit wick, not enough to get us out of the trade though, and then click, click, click. Trade starts going our way. Well, Holly gets out after her designated time and books a solid 19 cents. However, as Steve and I always like to say, if you're in that trade and you've got your trader's hat on, Holly's going to get out, and if the trade's going your way, you're like, why am I going to get out? I should just exercise some proper risk management, use a trailing stop in my head or set an alert for it. But the bottom line is there was really never a reason to exit the trade, from this entry point right here.
Yeah, just trying to keep it simple. Green, sell half when Holly gets out. It's not it's just an opinion. That's what I would like to do. But if it's red and it's a stop hit, well, you probably don't want to argue. And you just get out and reset that re-entry. And if it triggers, it triggers. If it doesn't, it doesn't. Just reading a comment and replied to it, we are working on some future releases that will be as simple as going in and just right-clicking in the grid on a stop-out trade and having an option just one click away say reset price alert. And so it'll just be a very simple reset. You don't have to go in, calculate, and open your price alerts and set. We're trying to make it very easy to not miss these secondary calls because, once again, the statistical probability of that trade is good for the entire day. and then it goes back into the shed, and everything gets re-optimized and re-back tested for the following day.
And Steve, you just triggered a long a memory that I haven't thought about in a very long time, and that is, since Steve and I date ourselves all the time because we started trading in the mid-'90s, right? And we're kind of baby traders. We had our ups and downs. And one thing you would do, and you tell me if you did this, back then a lot of us traded the same stocks every day, Amgen, Amazon, Yahoo, and most of the time we were on our game, but we'd have our days where we would just overtrade in a big way. I'm talking at least 1 million shares, right? And you get down and you can't get your groove, and so you do what we used to call grudge trading. You're just like, I'm not giving up. I'm not taking no for an answer. So what do? You trade 500,000 shares on one stock, and by the time it's all said and done, you might be up on the market, but you're going to lose a couple of grand in commission on that day, all right? So that's a little type of insanity that traders go through now and again. Hopefully the older you get, the less you do it. But it brings up a very good point on what we're doing here. You see, statistically weighted sets such as these are just that. Now, when you try to apply them in the marketplace, they don't account for things like, we do try to account for slippage, but they don't account for the stock moved too fast and you just don't want to chase it, right? So you didn't get the fill, right? So this is a scientific methodology that will allow you to see Holly get stopped out of a trade, and then you can capitalize on her stop out. But it's in other words, Holly gets long here, the trade starts moving our way. Now, I don't want to overtrade this thing, but once again, look what happens right here. We draw a line right here. I'm in the trade with Holly. It's going my way. And now look, as it really starts to get traction, boom, what does it do? It breaks out of its opening range. Once again, opportunity not only to hold the trade for a longer time because we're a human, we know what's going on in the market, trade's working, there's no reason to get out, different than Holly. And not only do we have the ability to hold it longer and capture this alpha, but we have the ability to add to the position at the appropriate time, right? So, yeah, Steve, we'd be much different people right now had we had this technology and this methodology exposed to us back then. Instead of just been in there and going, But hey, better late than never, I always say. So already just on 2 trader rounds, 2 re-entries, and a longer hold time. So the re-entries, notice that there's no column here for re-entry or second entry. So we can't even see that right now, but that is additional alpha that you can't even see in these columns here.
One of the things I wanted to do today, because today was such a good example of possible follow-through on these trades that start as intraday, and we often say, it's up to you to decide if you want to let it and carry it go longer. I think today, when we do our price alerts and set up and mark some charts, we're just going to draw from the pool of Holly trades and see how some of these things look on the daily. And real quick before I forget, if you wouldn't mind, can you put the daily spiders back up? I'm sorry, put the intraday spiders back up. Good. I want to highlight something to people, why one of the reasons I think today was so strong. Can you go to 15 minutes maybe? Sure. And let's go to 15 minutes, and I guess we can just leave those after hours in there. But I want to highlight to you today that the spiders did what we call the horseshoe. After that pink line, we had that nice gap up at the P. We had an attempt to fill the gap. We did not fill the gap. We went back to highs. And we got follow-through, and that is the psychology behind the pattern of the horseshoe. The strong gap up, the inability to bring it in and close the gap, and then a move back to highs, even though it did take a while, the last 15, 30 minutes, of the market is where the real movement came, and then, of course, looking at after hours as well. But just imprinting on you guys when I talk about a horseshoe alert, it's exactly what I'm talking about. A nice gap up, failure to complete the gap, and then back through highs. Those are the kind of things you want to pay attention to because there can be some additional momentum on the upside. Same with the downside. You've seen me demonstrate the inverted horseshoe where it gaps down and then rolls back over like a rainbow and then just goes to new fresh lows. So personally, when I saw that happening in the spiders today, we went back and forth, a lot of choppiness, but boy, when we went to highs, I said, okay, well, this day really could get interesting. The bias is long because the market is putting in a horseshoe, of which I'm calling it a horseshoe. It's a false gap-up retracement. And just a little bit of history. For those who don't know, I'm user number 3 in the Trade Ideas system, and when Dan and Phil first came to a few traders they knew and said, what would be the coolest alert that you could see if we could build it for you? I said, this. I want this. And it's been there ever since. Just depends on the market when it works better and when it doesn't, but I'm constantly back testing it and trying to get a feel for what type of market environment either direction works in. But big picture, that's what the market did today. Spiders, Qs, everything did one big giant horseshoe, and when you see that kind of price action, it's fractal. It can happen on daily charts, it can happen on 15-minute charts, it doesn't matter, intraday or daily. Those are very positive type of momentum setups. So I didn't want to let that go unnoticed.
No, that's great. It's just, boom, as soon as I put in that little wick right there, no retrace. And I guarantee you, Steve, there were a lot of people sitting out there today that were like, oh, this is immediately going to close the gap. But that did not happen.
Well, there's always a good chance for it, the way the market's been lately, but not today.
Right.
So
right.
What do you want to maybe mark up these Holly alerts and see if there's any follow-through, some possible areas to set, or do you want to maybe work on turning a top list into an alert window? Where do you want to go?
Well, I'm just checking the time here. You know how time flies when we're having fun. We should probably go ahead and attack the alerts based on the based on the Holly tree.
Let's just go. Let's just stretch it out and start from the top, and we'll put up a daily chart because that's what we need to look at. The intraday charts don't tell us much, but we can stretch out that daily chart a little bit and get a good feel. Matter of fact, that's a good example. I was showing somebody today an example of the event alert that we have called break out of resistance, which is an algorithm that Trade Ideas uses. And we set up a quick alert, and this was the first one that came out. It's a pretty good example to show how the algorithm of Trade Ideas identified break and showed in the history today of that alert using the breaking out of resistance. But
right, I was trying to find the stars. I set a limit alert on that today, actually. But we can set a fresh one if it's a viable candidate here. We're looking at if we use this guy here, probably be a pullback, if any, or do we even want to deal with the pullbacks today and just do the ones that have not broken yet?
No, I think let's look for the ones that might have some additional movement to them, and then we can keep an eye on them and see if it's warranting a secondary alert. I think let's just do that.
Okay, so let's do this. How about we play a little game here, like a game show, Steve? I'll double click, and then you tell me
yep.
Yes or no.
I like that one. Why do I like it? Because it's in an uptrend. It's making higher lows. It had about 9 or 10 days of sell-off. It based at 75.28 right there. It popped above, and it closed on highs. I think there could be some follow-through on that. Don't see any reason why you couldn't mark that up from the high of today's candle, because it looks like that candle is hell-bent on trying to move and test those wicks 7-8 days ago. It's just the anatomy of putting in higher lows on a good trend. So here I think would be a great example. If you were in this stock today and it closed on highs, you've got to ask yourself, why am I getting out of this one? Just because Holly is? Holly's got her hand tied behind her back for the most part on most days because of the fact that she has very high risk management and she has to get out before the market closes. But again, here's a great example of, I think, you got to ask yourself on this particular one, why am I getting out of all of my shares? Maybe I should just get out of half my shares. And it's so much easier to turn your back and focus on other stuff and just let a half position run for you with no stress or no angst.
Exactly. All right, so we'll take IART.
Okay.
Then we'll get STE. Let me compress this. I'm thinking STE.
You know, it's kind of in a range. Yeah, it's not as pretty as that last one. It's just kind of bouncing back into its range, so nothing there. And again, you know, somebody just asked, are these strategies only for day trading, or is there a way to look at position trading? That's exactly what the drill we're going through right now is. These alerts come out as is. You have to be the one to decide if you like the chart, if there's continuation patterns. So Adam, I mean, I'll call your attention to what we just did in IART. That could be a great candidate for a swing trade. But there is no swing trade window and no day trade window. They all start the same. So, yes.
Exactly.
All right, so what's
next? So next on the list, how about Stump?
Nothing really there, just kind of a wick. It looks like it ran some stops, had a decent day trade. I wouldn't see a whole case for any follow-through on that one.
All right, now here's little Juno.
Well, this one is interesting. Now let's take a look at that level of 44.67 or 40, whatever that level is, 45 it looks like, excuse me. Going back, way back in April, you could see it stalled out there. It actually gapped above 45 and then it gapped back down below. I'm seeing that you could put an orange line in there right at that 45 level and make a case for that being another pivot level. There could be, I think there could be a good case to be made. I'd like to know if the stock got back above that price. So
we'll say 45.01.
Okay. Let's once you click that, let's zoom out a little bit. Let me just see where that is in the bigger picture range. Okay, it's just kind of a mid-range then. Somebody's pointing out we will have moving averages coming very soon. That's the one big ticket item that's being worked on for our trade ideas charts. And I just pulled it up on another chart, and I do see somebody's comment. It's resting very, very nicely there on the 200-day moving average. So interesting.
Yeah, and the cool thing is we have the right to be picky, right? So we can just, you know, we don't have to take things. We only take the pristine charts most of the time because there's plenty of them out there if you do your homework and you find them.
Okay, let's move on to ALDR. I kind of like this one. Looks like we put in a bit of a base there. Where'd we go? Today we had a nice down wicking candle. It tried to sell back off below 25 and couldn't, and closed very close to its highs. A good case could be made here that it's trying to put in, albeit a very smaller higher low. It could work off of these levels. It had a very, very nasty pullback, really, from $32 in a couple weeks of selling, but seems to have found a level of interest and closed very close to highs today. You know, we could put an alert just above today's high close for some possible follow-through. It's not the gospel, it's not the Holy Gospel, but it is the Trinity, and the Trinity means that we have to evaluate it when we pull it up. We'll use the idea generation tool, which is Holly. We use our charts to look at the footprints in the sand and see what makes sense. And then the third tool is our price alerts, so we never miss something that we noticed doing our homework. That one might have triggered here after hours. No, it's not after hours. I wonder why that triggered.
You know what? Let me pull up my squished up screen here.
It's not trading after hours. I can see that.
So ALDR, why did you trigger? 2583. No, it does not appear to be at 2583. All right. Maybe we should try to resubmit it real quick here.
We'll try it one time. If it doesn't resubmit, and we'll pass.
Okay, so once again, the price is 25.83, which is the high. Actually, I was looking at this chart and looking at this window, so that was probably my bad. So we're staying past the high of today, correct?
Yes.
25.87. All right.
That's why.
That is it, I think. Rises 2, and this is the Holly. Trade around. Okay, voila. All right, so moving right along here. Where you hiding? Okay, sorry about that. Boy, I'm telling you, going from 50 inches of screen space to 12 is not
Yeah,
easy.
exactly.
Okay. All right. So ALDR.
All right.
Now we're looking at the MZOR. Yeah.
Oh.
MZOR kind of.
Interesting. Let's zoom out a little bit and see where it's come from.
Yeah.
Okay. Well, gee, I don't see much resistance there, and we did close on highs. So if this was a trade that was taken as a Holly trade today, and you're staring at the daily chart, you have to ask yourself, time stop. The shot clock was ticking for Holly. There's really no reason technically to get out. The time stop is... there we go.
I'll be back here, you know, but...
We got to go way back. But the way it closed on highs could be interesting for some possible follow-through. I don't know. It's had... okay, so there you go.
We just draw a couple of lines to try to give ourselves a point of reference here.
Looking left, trying to find the supply levels. So
we've blown through this little guy. So next stop could be this area right here.
So I think it would warrant a price alert at the highs, but again, it warrants even more a reminder, if you were in this trade and you took a trade like this, at the end of the day, why are you getting out of your full position? I think it might be wise to consider getting out of half your position. Take a profit lock on that and use the house money, and it's so much easier to stay in and let these things work for you once you've taken off a chunk for a profit. All the good traders, and I mean all the good traders I know, they do that. They don't jump in and jump out with the same size all the time. They're scaling in and scaling out.
All right, Steve, we've got another kind of high flyer here.
Rylan, is this the home builder? Wow.
Yep, RYI. So that's that line from the prior high from way back when, right?
Well, we've had 1, 2, 3, 4, 5, about 6, 7 days of good upward movement. Yep. We could also call this a red bar ignore. For those who aren't familiar, we got green, 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 red, and then covered right back up with a green, and that is also a fractal type of pattern recognition.
Exactly.
For those of you in the trading room, Barry uses the 5-minute RBIs and GBIs, and he uses the 15-minute RBI and GBIs, but at the same token, the daily RBI, red bar ignored. And the theory behind those is once again, the sellers could not bring in the strong trend. They couldn't get any bounce, pull back, any breather, covered back up with a green candle. Based on that, I think we could mark that up for a possible continuation high, because that's the theory thinking on these, is continuation patterns. The red bar ignored and the green bar ignored is discussed ad nauseum in the live trading room. So if you want more information on the RBI and GBI, you definitely should be in the live trading room.
All right, lock that guy in as well. Take a look at this guy. See what he has to offer.
Interesting.
You know
what I'd do with that one? I'd probably go to that high from 2 weeks ago, up there around 38.
Right.
It's probably trying to get back to those levels, and if it can clear that, that may be a level of interest, because it is putting in higher lows, trying to do like a trend change.
Yeah, it'd be like a 38.42 level.
Okay.
Rises, and once again, just so we know where we got this stuff, we always want to make some notes in here.
Never hurts to have your unemotional current self give notes to your future, more emotional angst self as money is on the line. That's a decent one. It looks like it's trying to put in a base and trying to put in a higher low, but it hasn't really pushed off yet and shown much. So I think I'd pass on that one. But it's got potential.
Trip.
Ugh, look at that, and just right in the middle of its range.
Yeah, shish kebab.
Really, I mean, you could make a case for maybe another follow through on today, but just looking back, when I look left, I just see just a big mess there.
Yeah, too much noise. All right. MB.
Well, about 1, 2, 3, 4, 5, 6, 7 days of green run so far. It's looks like it's destined to get slammed right into that resistance
Yeah.
level higher, which is coming up soon, and it's probably going to require a pullback and gather its strength and take a breath, give the troops a warm shower and some food. Nothing really compelling there.
Yep. RL. Okay. Let's see. Well,
Right off the bat, I see.
Deal with here. Well.
That 100 level. The 100 level is just glaring at us. It's tried twice to get above, so I think you just flag it for, 100 and a couple pennies.
Yeah.
And I like the sideways action there as well. I like the way it hit 100 and didn't pull back like it got scared. It pulled back a couple days, tried again, pulled back, tried again. It's going to keep on knocking, hopefully, until it finds that weak spot. So the sideways action is good, which means it's developing potential energy to be used, hopefully, on a push through that 100.
Absolutely. All right, well, let's take a little count here. Let's see how many we have for today. Am I at the top here? Yep. Okay. I was playing tricks. So let's see here. How many do we have? We've got 1, 2, 3, 4, 5, 6, 7. Now, yeah, okay, we've done 7 because some of these were some of the ones that I did earlier in the day.
Gotcha.
I don't mind it giving these out, but I don't want to give a triggered alert.
You don't give triggered ones now. You just go for the workings.
Okay, so post was already done too. So yeah, we got 1, 2, 3, 4, 5, 7 to go. Shall we round it out at 10 and do another 3?
Sure, let's just do that.
Okay. All right, so RL we just looked at. WEC. Back it out a little bit here. He's popping all-time highs or 52-week highs as well.
Yeah, I think that one. I think it's flagging. It's moving sideways. There's no action today, but a lot of wicks on the bottom showing every time it tries to sell off. Buyers are pushing it back up, so it makes all the sense in the world to put a price alert above that top candle. If it can get back above there, it also has kind of a sideways-looking action, which again helps keep the potential energy intact of a successful push the next time.
Yep. Okay. Now that one just happened to get absorbed by my line. I don't think it triggered. That's good. Okay.
Do we have anything under 5? There's a 5 there. So we're coming up on one. Let's look at that ENIC. I think we did have an opinion on that ENIC. Somebody's asking maybe a smaller priced one.
Is this let's see, how long has this thing been trading?
Not long enough, huh?
Because it's not letting me go back.
Yep, exactly. It looks like a new issue that came out on the 21st of April, opened up around 646. The thing of interest today is that it did get above that line exactly, but then it pulled right back. But that's not always the worst thing in the world. That doesn't mean it can't try again. So I think you could try again to put a price alert at that exact same level from which it broke out prior, which, of course, would give you a bit of a head start on the top of today's wick just to see if it could make it through, but that could be a level of interest. I like that double bottom look that it's got going there. Just a bit of volatility today, though, pulling back like that. But, for those of you who've followed Etsy, ETSY, the trade of the week, we all know things can break out and come back and regather and then maybe go back and do another attempt at that level. So there's a lower priced one for you. And again, we're just picking off of the Holly trades today and seeing if we can identify some more upside or some more follow through or levels of interest on here.
All right. So Steve, I just pulled up EQT, which is what we're seeing right here. Here's the
yeah, it looks like it's kind of tiring out. It did break above those.
Look at that.
Well, that is true. That's a good point there. Let's do this. Scroll back a little bit. Put your or I can do the same. Put my my high and try and find out what that right at that particular level. It looks like what is it? 79.42. What was the high today?
I believe so.
79.46. So we could put an alert there, but the way that's looking to me, it looks like it's tired. It looks like it's spent a lot of energy getting there.
Hey, I agree. Yeah, I agree. We
Yeah,
could always do, just think about it. If we did put the trade on here,
right.
stop loss would be where?
Uh,
And that's where we're going to put the backfill.
I say that 75 gap. I think that gap there at 75 on that between those two green candles is a possible level that we could try and get tricky here and do the opposite of what we've been doing and set a pullback alert.
Kind of like the bottom of this candle?
No, farther down at 75.
Okay, so right at 75.
Yeah, there's a little gap right there.
Okay.
And gaps were meant to be filled. All you got to do is look at the SPY, and you can see last week how it filled that gap back there on that big long candle. There was a gap down there around 206, 205. So sometimes that's what the price action is eyeballing. Can be we call a gap fill. So yeah, you see which one I'm talking about there? It's right above the D. Yeah, in that.
Right. We'll put back here.
I'm just showing everybody right above that red candle at the D and that green candle. There's a little gap in there, and that's where that giant wick came back and filled about 5 or 6 days ago. The bottom of that wick just touched that gap, and so that's the eyeball level that your possible pullback alert exactly. So we'll set that as a pullback gap fill.
75. What exactly? Which one are you? 75?
Sure.
Oops. I don't think we get filled on a 65. Okay. If it falls, want to go long. PV fill. Holly. Trade around. All right, I think we got one more to go.
Okay.
All right, so I just randomly pulled up ED.
You know, that's kind of like the one we did earlier. I don't recall the name, but it's flagging. That's what we call a flag, pulling back and spiking back up towards the close, so rejecting those sell attempts below 76, it looks like. So in that particular case, I think you could just make a new high, above that prior high 6-7 days ago. And if the price explodes out of this bear flag, it will certainly attempt to challenge that prior high, and that would be a level of interest that we'd like to know about.
All right, so we'll say 78.41. Again, the Holly TA.
All right, so there are 10 simple ideas generated by the AI that we look at footprints on the sand on the daily chart and then try to identify a point in time in which we want to be alerted to it. And it's as simple as that. I use the analogy sometimes, you sit at the bar and be the most interesting man in the world and let everybody come up to you and talk to you rather than chase everybody around the bar trying to strike up a conversation. This is a way to let really interesting things come to you in real time.
All right, and let's see here.
What he's going to do now is copy that, and for those of you who want to take those working alerts and you have the premium functionality, you can load from the cloud, and that will just be dropped directly into your price alerts. So call your attention to the chat window to get that information if you so want it.
Yep, it's in there. So all of you that have the higher functionality, enjoy. Tomorrow's Friday, so I hope everybody has a great trading day tomorrow. Steve, what do we have left on the agenda?
I think that's probably it. I think that's good to go. We spent almost a full hour rehashing some good stuff here, so let's say hi to Scott. And for those of you that are maybe looking for a secret cheat code to get a little bit of a discount, Scott's going to have something for you.
Yeah.
Hello, Scott.
Yeah, certainly. We'd like to thank everyone for showing up, and part of that is we provide discount code. So if you want to pull that slide up, it also shows you how our prices are structured. We're a software as a service company. We got two ranges. We have the regular and the premium, and the regular is $99 a month, or you're still on the wrong slide there, buddy. $99 a month, or $888 per year. And that includes everything except the AI and the higher functionality like price alerts and red bar ignore, green bar ignore, and the odds maker. Now the $188 a month or $1888 a year includes everything that you've seen. It includes access to the AI, all the higher functionality, all of that good stuff. And of course, all of these are automatically recurring but no contract. And you can use that code as you see it right there on your screen, Trading Studio. all caps, and for 15% off immediately at checkout of your order total for your first month or first year. I also have that information along with all of our contact information available as a download in your handouts panel. You see a PDF called Subscription Savings. Go ahead and grab that, and that'll include the same thing. You can go directly to trade-ideas.com/price and just get on board right now. If you are already using us as the regular version and want to upgrade to premium, you can just go ahead and purchase the premium version, then contact support at info@trade-ideas.com, or just contact that same email and let them know you want to do the upgrade, and they'll help you out. Thank you for attending. The recording will be up later tonight or tomorrow morning. You can contact us at info@trade-ideas.com for any of your support needs. You can follow Jamie on Twitter at QuantBot, or you can follow Steve at Today Trader, and we are also Trade Ideas and Trade Ideas 1 on Twitter as well. Facebook.com/TradeIdeasPro. We post some interesting things there that are different occasionally. And of course, our phone number is great for any kind of billing issues you have, although the agent there cannot answer your technical questions about trading assistance. You need to contact the info@trade-ideas.com or leave a message with her, and we'll get back to you. And I want to thank everyone for attending. Thanks, Jamie. Thank you, Steve. Talk to you gentlemen on Monday. And everyone have a great weekend.
All right, sounds good.